Hello everyone, Charlie Rohr here with American Retirement Advisors with this week's Gradient Investments market update for the week ending September 23rd, 2022. Joe is out of the office this week, but will return next week, so we're covering the commentary for him today. So in stocks, equities were down again across the major global indices on expectations of falling economic growth globally, as central banks in the US, Europe, and Asia raised interest rates. The market declines were led by U.S. small and mid-cap stocks, the Russell 2000, which dropped by 6.58%. The benchmark S&P 500 declined 4.63%. The Nasdaq was down 5.06%, and international developed markets, the EFA fell 5.59%, and finally emerging markets were down 4.02%. Value growth outperformed growth stocks. I know this week as well, the market has had some drops as well as you've seen. One thing to keep in perspective that we'd like to share as well is the odds of being positive. When you consider the S&P 500 from 1926 all the way to 2021, the S&P 500 has returned positive returns 74% of the time and negative returns 26% of the time. So in addition to being properly allocated between safer green money, that we call it, like cash and annuities that have no loss, when considering your money in the market, it can be important to look at this bigger picture. And of course, we'd always be happy to discuss your specific situations, any questions you have, any concerns you have about where you're positioned right now. In fixed income, in bonds, the Federal Reserve said Wednesday that they are raising interest rates another 75 basis points in an effort to curb inflation. So that brings the Fed funds rate to 3 to 3.25%, which is likely to curb economic growth as borrowing becomes more expensive. The Fed also said that its median expectation for rates at year end points towards another 50 basis points increase in the Fed's fund rate at an upcoming meeting. For 2023, the Fed is projecting a further increase by over 140 basis points from here. As a result of these hawkish indicators, bond prices fell while interest rates rose 35 basis points on 2-year Treasury notes to 4.2%, and the 10-year and 30-year rates rose 24 and 9 basis points respectively. The yield curve remains inverted, now a difference of 51 basis points between the 2-year and the 10-year Treasuries. In some economic data, the index of leading economic indicators, the LEI, was down 0.3% for August. Although this was better than the negative 0.5 in the prior month, it was worse than expectations for a flat reading. The LEI fell 2.7% over the 6-month period between February and August of 2022, a reversal from its 1.7 growth over the previous 6 months, signaling a recession lies ahead. Interestingly, the coincident economic index increased 0.1% in August after increasing 0.5% in July. And we're looking at oil. Oil prices dropped 7.1% last week to 78.74 per barrel of West Texas crude. This was their lowest level since January, at the beginning of the year. Oil prices were pushed down by rising interest rates from not only the U.S., but also other major central banks in a global effort to cool significant inflation. Rising rates are generally feared for their negative impact on demand for goods, services, and energy. And then looking at a few specific companies here, we have Global Payments Network, which is a G33, Contrarian, and Core Select holding for folks with Gradient. Dropped 11.97% last week due to investor concerns around possible negative earning revisions due to foreign exchange next year, as well as operations in Europe and possible slowing in consumer spending, all due to rising interest rates. And Meta Platforms, which is a G33, Contrarian Choice, and Core Select holding, formerly known as Facebook, of course, is planning to cut costs by at least 10% in the next few months with hiring slowdown and freezes. This comes, in, not surprising, in the face of an economic turndown, which is the worst the company has ever experienced. Shares were down just over 4% for the week, respectively in response to a strong report from one of their competitors in the security software sector. And that concludes this week's market update. Again, we're looking at a little bit of a rough situation in the market, so if you have questions about your specific situation, want to look at how you're allocated, feel free to give us a call with any questions you have. Again, Joe will be in the office next week as well to talk with you. We want to thank you again for being part of our ARA family. To contact us, as always, you can contact us at 855-756-5700, or you can visit our website at aradvisorsinc.com. Don't forget to visit our Facebook and YouTube pages and scan the QR code to subscribe to our newsletter. Thanks so much and have a great week.